Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meizinger with the International Securities Exchange. Unfortunately, Steve Mizik could not make it today. So what I'm going to do is essentially I'll try to go through his slides pretty quickly. Again, I can't really comment on all the slides, but again, Steve is with the Online Trading Academy. So please go to smizik@tradingacademy.com or www.tradingacademy.com if you have any questions. Let me just go through these slides. We'll go through them rather quickly, and then I will take some questions hopefully about options, as the market is obviously very volatile, tremendous opportunity with risks involved also. So the ISE FX options are available through your equity options broker. So people like Options Express, Interactive Brokers, TradeStation, Thinkorswim, those kind of brokers, you have the ability to trade right through your account. There are others out there also, of course. You can trade through those kind of brokers, equity options brokers. They're cash settled in U.S. dollars, European-style exercise. They can be traded as spreads. So we have 6 pairs. Australian dollar has been probably the most volatile, symbols AUX. British pound, BPX. Canadian dollar, CDD, Euro, EUI, Swiss franc, SFC, and the Japanese yen, YUK. And remember, this is from the perspective of the U.S. So what is the U.S. dollar worth relative to another country? So if you're going to, let's say, Paris, what's that dollar worth? Well, we know it's worth a lot less than parity. And it's actually worth, let's say, 69 cents. We multiply that value by 100 to come up with a $69 value. So bullish, bearish sentiment, people always asking about this. So again, these are Steve Mizik's slides. So bullish sentiment, it really is people are demanding, or they're thinking that prices are going to escalate. So that's sort of a way to look at emotion. Some people look at call put indicators. Again, you got to be careful of the indicators because the indicators can help you, but sometimes through sophisticated option trading strategies, you can actually see where people trade more call options and they're bearish, or more put options and they're actually bullish. Again, bearish sentiment, same exact thing. Nice to look at these numbers. They're really helpful, but you need to understand that occasionally that institutions or investors could actually be buying more puts and be bullish, or be buying more calls and being bearish. So the current U.S. dollar sentiment, as Steve pointed out, very bullish as of about 2 weeks ago, and this is a very interesting point. This has actually shifted from really bullish to really bearish in just a short period of time, about a week or so. So we'll see what happens here. The U.S. was the first to go down, so many are saying, and of course the OTA is thinking this also, that they may be the first to emerge from this. So again, if you're bullish on the U.S. dollar, you'd be buying a call. If you're bearish, you'd be buying a put. And of course, there are a lot of different things. And really, the way I look at the headlines is what's going on. Is it inflation or deflation? Inflationary economies, maybe if someplace like Australia would do well, maybe Canada. Deflation, well, maybe Japan, maybe Switzerland. So where would the U.S. fit in all that? Again, that's your call. And again, these are correlations that have actually worked in the past. They won't necessarily work in the future, but at least that's what's happened in the past. So occasionally these hedge funds have to liquidate, and that actually creates distortions in the market. What's going on sometimes is really unexplainable, and it's because somebody has to actually exit the market all at one time, and we're getting a lot of deleveraging now, so you don't really know where these crosswinds are coming from. So hedging, how can you hedge these options? Well, it depends on really where you're from. If you're in another country, well, it depends on what you're looking to do. But no matter what, if you're trying to hedge the U.S. dollar, you'd be buying a put. If you're long the U.S. dollar, and if you're trying to hedge, let's say, another currency, and you thought the U.S. dollar was going to go up, you'd be buying a call. I mean, it's just like that. It's that simple. So the ISE FX options product is based on the idea that if the dollar rallies, the calls will go up, and if the dollar sells off, well, the puts will go up. When's the best time to hedge? Well, all my years of trading, I feel that hedging is something that's maybe should be done quite often, because if you wait too long, if you wait till the proverbial eyes of the hurricane are right on top of you, well, maybe you're just too late. So, but again, you want to look at your own financial goals, your own risk tolerances, and that's really important to trying to get in to your overall hedging. It's basically a long-term approach of how am I successful financially, and then short-term and intermediate-term steps to get there. So, spot Forex currency hedge strategy. Well, you can do a lot of different things, but one thing you can do is just quite simply buying a call. Let's say that you're bearish on the U.S. dollar in your spot account. Well, you can buy a call. That would give you a hedge in the options market, or vice versa. Let's say that you're bullish on the U.S. dollar, but now you're worried. Well, you can be buying a put, and just in case the U.S. dollar sells off. You could do a lot of other things like vertical spreads, calendars, even straddles, which means that you think the market's going to expand. I should say the volatility is going to expand. So the ISE FX options, you want to take a look at what the premiums are and try to ascertain, what kind of risk is involved in that premium. So that's really important to understand. There's risk involved in everything. Some were saying 2 years ago or a year and a half ago when we first started trading, almost a year and a half ago, that the FX market, the volatilities were so low because the FX market would never really move. So what did we see? Well, obviously the volatilities have been going up since then. Now we're seeing people say the opposite, that the market will continue to be volatile forever, more than likely not. So you can actually you can hedge your view, but again, be careful and look at the premiums. So when you're looking at risk, you got delta, gamma, vega, theta, and rho, and again, options are based on these Greeks, and Online Trading Academy can help you along with other educators. Delta means, if the underlier moves, how much does my option move? Gamma basically tells me how much my delta is going to change. Volatility, this is huge recently, especially when you're trading financial stocks, but even in the ISE FX options, vega risk really tells you how much, if we have 1 unit changes in the volatility. Now, for instance, as I was saying early on, dollar yen, volatility about 17.4%. What does that mean? Well, we should say option pricing model that says that this volatility is basically in the underlying should move about 17% in a year. What happens if people think that it'll be less in the future? Well, that volatility will be reduced, and therefore anybody that's long an option will have this, volatility risk. Volatility can go up also, so it's a way to quantify the risk. That's vague. It's really important. Options decay. They will, at some point, at expiration, they be worth zero or their intrinsic value. So you have that time decay risk. And rho, option traders do not normally perform hedging for interest rate risk. I'd agree with that. So, but again, the interest rate differential is huge when you're trading the ISE FX options, especially if you're looking at, let's say, the dollar Australian dollar. So that's the way you would look at the rho, as the interest rate differential.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.